And once you're able to identify these setups, you're gonna make much money. You're gonna feel filthy. It's all about pattern recognition and understanding what stocks you want to own and what the patterns are. It's the language of setups. It's an art. The problem with anticipation is, okay, like let's say, the thing is you want to maximize your profit, okay? You want to like compound your money as fast as possible. Like let's say I buy Tesla here because I think it's gonna go to 600, over the next month or two, right? But what if it takes this stock 3 or 4 days of consolidation before it finally breaks out? That's 3 or 4 days my money sits there. It's dead money, okay? It's wasted potential. You don't want to sit in a stock that's not moving, unless it already had a nice run up and it's just, pulling back or consolidating. That's why you want to, I prefer to buy when they start moving higher. Like Zoom, right? Like this thing has been a favorite setup of mine, in a few days, now. But what if you bought it, I don't know, 2 days ago? You would have sat in it for 2 days for no good, right? That's also, you want to maximize your profits. If you want to have, 100, 200, 500% years, you can't sit in stocks that are not moving, Especially in a bull market like we are in now, when things are breaking out daily. Like there's so many, things are breaking out daily. Sitting in a stock that's, that you think will go, but, but it's not going yet, it's just a waste of time. It's a huge waste of time. Yeah, yeah. What if this thing had broken down today, right? Just like Penn did. Like let's look at Penn. Like this was also a good setup, right? What if I had bought it in anticipation, right? And then it broke down. That could have happened to Zoom also. I mean, I'd rather have the stock prove itself. That's just me personally. Look, if you have a solid process, solid risk management, you have back tested your strategy, either if you do it mechanically, if you're an algo trader, or if you're a discretionary trader, you do it manually. Like you can trade whatever the way you want, but you need it to be solid, okay? You can't do random things. Everything you do, there has to be a reason for it, and you have to prove, you have to be able to prove that it actually works. That it has worked for many decades, that it has worked for 100 years. The same setups I trade now, if I go back at market leaders from the 1920s, it's the same things. It's exact same setups. If I look at the market leaders from the 1950s, it's the exact same setups. And if you have a setup that occurs over and over again, trade it. There is no right or wrong way to trade if you make it work. If it's something that actually works, that's not just some random noise. Oh, EMPH, looks like I got stopped out. Took a $64,000 loss on this thing. On the shares that I didn't cover during the day. Looks like gold and silver are breaking out again. This is a pretty decent setup. I like this. This was the bull flag of bull flags. I was super excited about this thing, and if I had anticipated it, You know, it never broke out. It was dead money, and I would have taken a loss on it if I'd anticipated breakout. I did buy a starter on this day, but I took like a tiny loss, but it never broke out. But like, it's better to just wait for things, the stock or a ETF in this case, to tell you what it wants to do. You want to be in a stock only when it's moving, right? The principle of swing trading, like stocks move in stairs, okay? Now this is an ETF, solar ETF, but this is, it has a leg higher, goes sideways or pulls back. This is how all leading stocks move. Every stock that's made a big move moves this way, except for like micro caps and nano caps that can, go up 1,000% in one day. Those, they trade differently, but this is how leading stocks move. Have a leg higher, it's like a stair, right? Go sideways, have a leg higher, go sideways, have a leg higher, right? Your job is to avoid it. Now this thing didn't really have any like long sideways periods, but your job as a swing trader is to buy it just as the next leg higher is starting, okay? You don't want to buy it here, you want to buy it here, just at the right time. You don't want to buy it cheap, you don't want to buy it expensive, you want to buy it right, okay? Like, I see, I've seen some comments in the chat, in the past, like yesterday, I think, someone asked me if I like a stock, and, I was like, only if it breaks out from this area, and, that person said, hey, wow, well, I guess I can get in cheap right now. But that's not the mentality you want to have. There is, if you want to get things on the cheap, it works if you are like a value investor, investor with a long-term trading, like investing horizon. It doesn't work in trading. Okay, you want to buy it just right. You don't want to buy it here. You want to buy it here. This is how every stock moves. Let's look at some random stock, like I don't know, Fastly, right? This thing this thing I've traded several times. Had a leg higher, right? Went sideways. Then it gapped up on earnings. I know several people, including me, bought it on the earnings. Has another leg higher, goes sideways, right? Has a leg higher, goes sideways, has a leg higher. Then it kind of pulled back and, built a big sideways step. And where did I buy it? Right here. Right here is where I bought it. When it started breaking out of this step, right? And now it's building another step higher. And once you're able to identify these setups, you're gonna make so much money. You're gonna feel filthy. It's all about pattern recognition and understanding what stocks you want to own and what the patterns are. It's the language of setups. It's an art. And Genius, this is a microcap stock. It's the same thing. Had a leg higher. Had a leg higher. Had a little bit of sideways. Now microcaps can move really fast. This is an extreme example. Had a leg higher. What the hell? Why can't I do a line? What? Weird. Had a leg higher. Wait, why can't I do a line here? Okay, now. Went sideways, had another leg higher, and that was the end of the move in this case. The same patterns over and over again. Getting out of... Guy, you shouldn't even trade Apple. It's ADR 3.2. You shouldn't even trade this thing. It's a good setup, but it's the wrong type of stock. If you want to compound your money aggressively, this is not the type of stock you should trade. You should focus on stocks that have ADR of 5+.